Alrighty traders, George here, time for the oil forecast. Let's bring this thing up from where we were to where we are and where we're going. For starters, June 22nd video, a lot of people expressing some great interest in how I did this and how much opportunity came to be so quickly. It was all brought about by this air pocket here and looking to get short on a break into it. So when that happened, able to move in favor very easily to hit target 1, and obviously we hit targets 2 and 3. Notice that they were both parked on top of this balance beam. And then one of the things I recently mentioned was if we trade below the floor here, we're likely going to at least see 48. So that was the setup that led us to some new downside. We had made this new bull impulse and we were going sideways. Could have worked to the upside. It didn't. Had it set up both ways. So here's that same chart and with some new stuff going on. Here's that bull impulse. Here's the sideways contraction. The bulls could not break above and the bears took over this thing. They popped the floor here. Look at the air pocket. They got a, what helped move price up helps move price down. So they've got a shot at moving this thing down pretty well. It's up to the bulls to come in and defend this thing at a higher point. Whenever I have a bull impulse, what I look to first is a 382 retrace. What happens there? We actually gap down and open there and didn't look back. That's negative. The 50 and 618, this is a hot zone for bounces. We basically couldn't make anything happen there. The 786, we get below that, there's a very good chance we're going to retest X, i.e. where this impulse starts. And there's also a fair chance of when that happens that we make new lows. So what I've got set up here is a new trade setup. Basically we have to move a little bit lower than where we are. This will be ongoing. If we bounce around the zone, breaks below 46.50, look for a run down to the low 42s, and below that to new lows altogether. We're going to go into the lower 36s and the lower 29s. Now you might recall when we first started selling off, I did this projection chart to come up with where we might be going. I identified these 5 price zones below 43. We hadn't traded to 42 yet. And what's interesting about this is that the 29.30 and 33 level correlate to this balance beam here. The 29.89 is a calculated level based on prior price action. 37 and 41.70 are north of this balance beam here, but below 50. So if we go back to this chart here, here's 36.44. That's a little bit lower than 37. Gives a little bit more weight to that area. But look at this. The 618 here is 29.33 versus 29.30 that I had off the monthly chart a while ago. That puts a lot more weight on 29.33. And then of course the 26.89 was my final calculation point for a sell-off in oil. So bigger picture, watch for price to get more negative price action below 46.50. 42 is the main target below that until we get some more changes here. Low 36s and low 29s for extended targets. And for the bull case here, nothing is really going to matter until the bulls start trading it north of this zone here. So just to tag what that area is, it's basically over 52.40. We get over 52.40 and it's going to set up the potential for the bulls to move it up. Until then, it's major overhead resistance, anything 50 to 52 there. And so this is not a good spot to look to position trade to go long. Minimum price action there would be to see this level breached at about 48.68. So watch price over 48.71 to show some strength to lead it up to 50. Nothing to the bull side matters really over until 52.40 is cleared. This is all about downside right now, and we'll see if we get those moves lower as I've spelled out here. Use the link at the bottom of the video, hop in the live room. You can see more of this on the fly, and until then, we'll see you back in the live room.